Welcome to Navigating Payments, Insights from MAPP Advisors, a special podcast series from the Leaders in Payments podcast. In this series, we sit down with the experts at MAPP Advisors to explore the evolving payments landscape. From ISOs and ISVs to sponsor banks and fintech partnerships, MAPP brings real-world experience and strategic insights to help businesses scale, adapt, and succeed. Whether you're looking to navigate regulatory challenges, optimize growth strategies, or prepare for an acquisition, this series will give you the knowledge you need to stay ahead in the industry.
Hello, everyone, and welcome to the Leaders in Payments podcast. I'm your host, Greg Myers. And on today's show, we have two very special guests, Alexander Renzi and Aleks Teichman from MAPP Advisors. So, Alexander, Aleks, welcome to the show.
Thanks for having us.
Thank you.
Absolutely. So let's dive in and talk a little bit about each of you. So Alexander, why don't you go first? Why don't you tell our audience a little bit about yourself, maybe where you grew up, where you're from, where you currently live, a few things like that.
Sure. And obviously, before we get started, thanks for having us on the show. We've been following the podcast for a while, and it's great to hear all the thoughtful discussions you have with leaders in the payment space. I think the work you're doing is very valuable in terms of lifting the curtain underneath the payments industry. So excited to be part of that conversation. I grew up in the Metro Detroit area, live in Los Angeles today. Our whole team is remote, so we talk to each other all day via screens. Yeah, it's pretty much about me.
Okay, Aleks?
Yep. Thanks again for having us. And just to resonate with what Alexander said, I've been following your podcast, so this is a real treat. I grew up and still live outside of New York City. I have two kids. They're 15 and 10. We've been here for a long time. Consider myself a New Yorker through and through. Most people agree with that know me, right, Alexander?
I would agree with that.
Great. Well, let's go ahead and dive in. So first question, Alexander, for you. So let's start with the origin story of MAPP Advisors. What gaps in the market did you see that led to its creation, and how has MAPP evolved to meet the needs of payments companies today?
Yes. So MAPP was actually founded over a decade ago by my partner, Jim Batista. Jim started his career in payments. I think he was one of the founders of the first e-commerce ISOs back in the late 90s, which he later sold. He then went on to start a gift and loyalty company that he also successfully exited. So I think after that, a bunch of founders in his network started approaching him and asking him for advice. How do I build my company? How do I position it to a sale? And I think that demand ultimately led to the creation of MAPP Advisors. I was fortunate to meet Jim over a decade ago. He represented the buyer in the sale of my first payments company. And we ended up staying in touch over the years. And about 5 years ago, when I exited my second payments company, we decided to partner up. So we've grown it from the two of us. We're, I think, over a team of 14 now. And we work closely with all players in the payments ecosystem. I think at our core, MAPP is deeply committed to helping founders achieve successful outcomes. We've scaled, we've sold payments companies ourselves, so we understand the challenges that founders face, whether it's navigating growth, attracting the right partners, finding the right partners, or maximizing value. Our firsthand experience allows us to provide actionable guidance, right? A lot of people will give a bunch of fluff. We've been there, we've done that, and we can help founders really grow. So I think that's kind of the differentiator. And I think I'd turn it back to you, Greg. I mean, you're obviously in the space. From your perspective, what do you think makes MAPP different from other advisory firms?
Yeah, I mean, I think my experience in the industry is there's people who know the space and there's people who kind of say they know the space. And I think that, you guys, just the team that you have, the experience. I mean, you just went through the list of companies that you've grown and sold, and Jim as well. So it's just, I think that experience. And then as the team has grown, you guys have brought on even more experience. People who are true payments geeks, like a lot of us, have really understood the industry, have built things themselves. So I think to me, that's like the biggest difference is, this isn't someone who, no offense to the people coming from the big consulting firms, but you guys have been there. You kind of know how the sausage is made. So definitely think that's kind of what differentiates you guys.
Yeah, and I think if Jim and I don't know it, we go find the best and brightest to hopefully join our team. And obviously that's why Aleks is here with us today. So it's been great.
Great. So, Aleks, over to you. You've built a career at the intersection of payments, banking, and fintech. What led you to join MAPP, and how do you see your expertise complementing the MAPP advisory practice?
I always think of myself as somebody who just wants to continue to learn and continue to understand. I think the payments industry is continuing to evolve. I've been in payments for about 20 years now. And like you said, kind of at an intersection of payments, fintech, banking. I started in the ISO space and kind of have gone through an evolution kind of in my career. I feel like I've done a full rotation around all of those industries. I've been in 2 different networks. I've run sponsor bank programs for acquiring specifically. So it's been a really interesting journey that I've been on. I think at least over the last few years, I've seen some fundamental gaps, particularly in the kind of in the banking space as it applies to acquiring. And with MAPP, I've been following MAPP for many years. I've been friends with Alexander and Jim, have built close relationships with them, and I've seen the way they navigate and just the deep expertise that they have across payments from a network standpoint, from a just, kind of understanding where the landscape and where the industry is growing. And I think at the core, what Alexander just mentioned, it's not about just ideas and decks. Strategy is also about execution and outcomes. And it's about making sure that you're getting them to the finish line as well. And that's always been my approach, is how do you kind of make sure that you get to the finish line, or at least directionally go in that direction. And it's a really grounded approach, right? Not a here's an exercise or here's a deck and you kind of go do it yourself. So that's been really interesting for me. Now that I've joined the team, I've been here for a few months and it's been a wonderful ride so far.
Awesome. So, Alexander, back over to you. So, ISOs have historically been the backbone of acquiring. So, what are some of the biggest challenges that they face today, and what does the future look like for the ISO model?
It's never been more challenging to be an ISO today. I think they're facing pressure from all angles. So, your acquiring banks, they're under intense regulatory scrutiny. Most of that's come from bad actors on the banking as a service side, but it's spilling over to the acquiring side. So that's challenging. You have your processors who not only are they competing directly with ISOs, but they're also limiting their investment and support in the ISO channel. And then obviously on top of that, you have more competition from the integrated payments and the software-led acquiring, right? These software companies are embedding payment solutions. They're making it closed loop. And it's really hard for ISOs to create differentiated models to their sales channel or to their end merchants. But ISOs are nothing if they're not resilient. People have been predicting the death of the ISO since Square launched its dongle in the early 2000s, right? But ISOs continue to adapt and they continue to thrive. I think the ISO model is hard to predict. Generally speaking, the most successful ones are shifting more towards value-added services and building deeper relationships with their merchants and with their resellers beyond just payment processing. So I think those who integrate into software, data analytics, and automation will continue to stay relevant. So the ISO model is not dead, it's evolving.
Okay, great. So Aleks, back over to you. So we hear more and more about banks and fintech and the partnerships and how that's sort of shaping the future of payments. So what do you see as the biggest opportunities in these partnerships, and where do ISOs and payments companies kind of fit into this ecosystem?
Yeah, I mean, I've been at the intersection of kind of bank fintech partnerships for probably most of my career. I think this is going to sound maybe really simple, but partnering between really close partnerships between banks and fintechs are no longer options. Generally, the past it may have been a vendor-client relationship, and those are very different than a really close collaborative partnership. And I think that's really important in order to continue to grow and be sustainable in a relationship between a bank and a fintech. The biggest opportunity really, I think, lies in the structured collaboration. Usually banks bring the regulatory expertise, right? And fintechs bring the innovation and speed. When it's done right, you can really launch interesting, innovative solutions to enable financial inclusion, to continue to push the value and the innovation in the space. I think when it comes to ISOs specifically and payments companies, the key is moving beyond just processing transactions and really, again, looking at it like a transactional relationship between a vendor and a client. I'll even say this, I think banks have traditionally been seen as a very commoditized part of the payments ecosystem. And, they were just the sponsor that sits in the background. I remember my old ISO days, the bank was just the small print that was on the very bottom of the merchant application or somewhere online, right? It wasn't really a big part of the consideration. More and more now, fintechs are thinking first about who's my bank. ISOs are first thinking about who's my bank partner. Are they sustainable? Are they going to be here tomorrow? Are they a good partner for me to really sit at the table across and work with and make sure that I'm building with and that I'm collaborating with, as opposed to doing it behind closed doors and just sending them transactional fees or basis points. So I think that really close collaboration, again, I know it sounds super simple, but you can't say that enough. A trusted relationship really goes really, really far. And finding the right partner that's for you and that understands, do you really need the bells and whistles that maybe one bank has? Or rather, do you need somebody that's maybe larger and is able to support you at a scale standpoint? So those are different considerations.
So sticking with you, Aleks, so with increasing regulatory pressure and the evolving market dynamics, banks are rethinking their role in payments. So how does MAPP support banks and developing strategies that help align both with compliance and the regulatory environment and with their growth objectives?
Yeah. So the thing that you mentioned, I think that's really important, is it's compliance and growth objectives. It's not one or the other, right? Ultimately, banks get into the sponsorship business or really any kind of payments or transaction business in order to continue to drive growth and revenue, particularly from a non-interest income perspective. And how do they kind of diversify their overall revenue and drive the revenue that is not connected directly to interest rates? What we've seen in the past is banks coming and asking us kind of really a range of different questions, right? So one may be, can you help us revamp our existing acquiring program? Because, you have the compliance expertise, but then also you understand from a revenue standpoint how to build it the right way so we can bring on the right types of customers. And then on the other side, we've had partners that come to us and ask us to build our acquiring programs from scratch and really be able to help them from soup to nuts, whether it's the business strategy, getting approvals at the board level, getting buy-in from the networks, from regulators, and then launching those programs. We've kind of seen the full spectrum and are able to support banks that are interested in payments across the board.
And one thing I'd add too about banks that I found the most surprising, and Aleks continues to remind me of this every day, is just how compartmentalized the different departments are, right? Just because the payments group wants to drive, non-interest income, the chief compliance officer, the chief credit officer is looking at it from a totally different lens. So I think it's really important when we start talking to banks is to make sure there's buy-in and what the different drivers are for each group within the bank as to why they want to have the program.
Okay. So Alexander, over to you. So what are some of the reasons that payments companies come to MAPP? Is it kind of only when they're ready to exit or other reasons? Can you maybe outline those? And then second part is, how has MAPP helped partners overcome some of those blind spots when they're looking to scale their business?
Yeah. So I think at our core, and one of our first core value is advisor, not banker. This means our approach is collaborative, not transactional. So it's very rare that we're meeting with a client and immediately selling their business. Our goal is to work with the client for at least a year to really position them for a successful exit or whatever it is they're trying to accomplish. Running a business, we've been there, can be all consuming, right? And it's easy to lose sight of the bigger picture. So that's kind of where we come in. We will look at your business through the eyes of a buyer. We'll try to accelerate your strengths. We'll try to address any weaknesses because we've seen the pitfalls ourselves, both personally running companies and advising companies over the years. Examples of overcoming blind spots, we'll help audit your vendor contracts to make sure you're getting paid correctly. That'll increase your EBITDA. We make sure transactions are qualifying at the best interchange rates. We'll identify key executives you may need to hire for the next phase of your business. Simple things like go-to-market strategies or sales channels. And even finding new partners, be it vendors or sales partners, we help with that because we're active in the space. And I think because we advise all the players in the ecosystem, we can help a payments company depending on what the life cycle is of the market today. We keep bringing it back to this, but right now the pain point is sponsor banks. Well, we've helped multiple sponsor banks over the years launch and grow their programs. So we know how to help you position that bank or we may know a bank who's the right fit for you at the time. So a lot of it is switchboard operating, but because we've had engagements on all sides. So what we like to say within our company is that's really our flywheel of success, right? So our domain expertise will lead to successful outcomes. Successful outcomes will lead to new and exciting opportunities, and then we learn more and create the domain expertise. So it's been really, really exciting to learn more about the payment space over the last, 5 to 10 years when I just started out plugging in a merchant terminal.
Right. So double clicking on something you said there, you said you typically like to work with these clients for up to a year sometimes before the exit. Was that purposeful, or did that just a learning that happened and you kind of realized that, hey, that's the best way to get the company the best exit? I mean, sort of how did that come about?
I can sound smart and say it was purposeful, but it was really, we were very fortunate that we get to pick and choose our engagements and the people that we work with. And what both Jim and I and the rest of the team have found is when we don't know the company to its core, it makes it very hard to tell the story and to really believe in them and help them achieve that outcome. The last thing we want to do is, bring someone to market and be totally blindsided by something, knowing that we could have waited 2 months and helped them fix that, right? So it's definitely become purposeful, right? But it's been through the growing pains of, when you first start, you take on any assignment and you're like, that didn't feel good, right? So it's slowly morphed into that.
Okay, makes sense. So Aleks, over to you. So for ISOs and ISVs that are looking for their next move to scale their business, whether that's becoming a PayFac or a FSP or whatever it may be, what are the most important factors they need to consider before making that leap?
Yeah, I mean, there's no one size fits all solution. I think we get different flavors of payments companies that come to us at different stages of their maturity. And sometimes they'll come in and they'll say, well, I want to be an FSP. I'm ready. I'm mature enough. Can you help me get there? Alexander is laughing because we probably get that more than ever, right? I get a lot of, I want to be a processor. Can you help us get there? There's different versions of this is what my goal is. And I think initially we go back and we say, okay, let's really understand your business. To Alexander's point, let's really figure out what do you have in terms of assets? What do you have in terms of resources, bandwidth? And really from a product standpoint, from a customer standpoint, what do you really need to add in or optimize in order to take you and your organization to the next level? Becoming a PayFac, for example, offers you more control, right? From a merchant relationship standpoint, because they end up being your users and not necessarily full merchants of the acquiring bank, but it requires significant investment from a compliance, risk operations standpoint. There's a tremendous amount of responsibility that you then take on. You really become a payments company. And if you're a platform, do you really want to do that? I get it. Andreessen said everybody's going to be a payments company, but do you really want to be in that and create that part of your organization as a core, what you do? FSP, for example, just another example, right? Allows you a lot more flexibility from a portability standpoint, but still demanding, right, from an underwriting, banking relationship. You've got incredible responsibility and fees that you need to pay. So it really depends on what you are looking to accomplish. More and more we have ISVs that are coming to us that really want to understand how do they right-size their business in order to optimize from a payments perspective, or how do they now lean in and monetize payments? I think those are really all very important conversations, really to have one-on-one with the individual organization, and the answer varies. I can sit here and sell for and against a PayFac all day long, right? It really depends on the company and what their goals are.
I would double click on that in terms of the ISV. Like we really feel for them, right? You go to any payments website and everybody says they can do everything, right? So it's really, really challenging. And ISVs have existed long enough now that they've gone through the pains of integrating and something not working. And it's really allowed us to have a lot more in-depth and fact-based conversations and be able to help them much easier now than 5 years ago. So it's gotten great how educated all the different players in the space have been, because it allows us to be more effective.
Yeah. And if you've been around the space a long time, you heard every software company should be a payments company. You've heard death of the ISO. Like we've heard all these things over the years. And it's kind of funny that none of them are really true. There's just kind of modified versions of all of them.
Yeah, I have 50 merchants. Should I, have my own bin? Yeah, go for it.
Right.
Right. So Aleks, sticking with you. So lending and issuing are becoming critical revenue drivers for payments companies. I think it goes back to what we talked about earlier. Are there other things beyond payments that ISOs and other companies in this industry need to offer? So talk about maybe why this is happening and how should companies think about these as part of their growth strategy?
Yeah, I think about just broader fintech, right? Financial services in kind of two buckets, right? One is consumer facing financial innovation and fintech that's out there. And there's been a lot of, from my perspective, a lot of deep saturation in consumer fintech, whether it's neobanks or, lending or BNPL, a tremendous amount of innovation in that space. And the dust settle where it will. And, there will be successful companies that come out of it and the full range, right? That goes beyond that. And then there's, of course, on the merchant side. And I think given where the regulatory environment has been recently, more and more within the payments ecosystem, whether it's issuer processors, whether it's lending kind of entities, right? Lending fintechs, they're really refocusing and they're pivoting into B2B or merchant. And all of a sudden, merchant has become sexy again. Why? Because a consumer is inherently more risky. There's, again, very saturated market. So just from an industry landscape, right, that's one perspective of the opportunities that are available to us in the merchant acquiring world as it applies to lending and issuing. I think from a user standpoint, when you think about businesses, whether they're enterprise businesses or SMB, at the end of the day, whether it's consumer or a business, all roads lead to, unfortunately, in our economy, lead to debt of some sort. And our country and our economy was built on the ability to have credit and to build upon that and to build a business based upon that. And so kind of coming back to your question, I think there's a tremendous amount of opportunity when it comes to lending, issuing, other types of embedded products, specifically for the merchant community. And so, there's been a lot of talk about embedded finance, for example, right? Again, that can go to consumer or business. It doesn't have to be one or the other. It could be both. But what I would say for a payments company that's really focused on businesses, especially SMBs, what is an adjacent value that you can offer your customer? And that doesn't necessarily mean they need a bank account. I'll be the first one to say that. That could be it. That it could be a great opportunity. But why is an important question. What are you trying to accomplish? What's the problem you're trying to solve? I think those are really important considerations when we think about, well, Square is offering or Stripe's offering a bank account and they're winning my business. So I should as well. I should be able to extend value to them as well. I think ultimately what I've seen also in the ISO space is the ability to really be a consultant to your small business customer and to be available for them. And I think that will stand out above and beyond a lot of other things that are available. Now, if you can also then add in adjacent value, such as potentially a lending product or an issuing product where applicable, where it makes sense, that is a sure way to win.
Do you think that the days of kind of the transactional part of payments is kind of going away? By transactional, I mean when I started in payments, the sales guy would get out of his car at one end of the strip mall and walk to every single business and then walk back to his car and, unload the terminals and plug them in and, very transactional. It wasn't relationship oriented. Do you think the days of those transaction kind of method of doing business is kind of over?
I would argue that those are actually more relationship based than transactional. Right. I would say that if you call Stripe and you're a customer of theirs and you try to get somebody on the phone, it's really difficult. I think there is still inherent value. And, I'll be the old timer maybe to say this, but I think there is still inherent value in having a person available. Is that enough? I don't know. I think those organizations, right, the ISOs, the agents, they still need some sort of product. They still need something in addition to the relationship and the ability to offer transactional processing, so to speak. There needs to be something that adds stickiness, right? In banking, they used to say you need at least 3 products in order to have a sticky customer. I would say the same thing here. Relationship building is one of those products. It can't be the only thing. The merchant processing is one of those products. And by the way, it's becoming super commoditized because your competitor is selling technology and they're giving away the payments. And so how do you couple together the relationship component, which I still at my core believe is very, very important in any relationship, but also add in value. And that, by the way, by way of some sort of technology or some sort of product or something that will make that merchant's life a little bit easier. If you can bring those two together, I think it becomes very powerful.
I think both are right. You have to have both. And I think that is the bull case for the ISO today, because payments is table stakes and, you're no longer going in and plopping down a VX520 and hoping they don't notice you did tier 3 pricing and why is this non-qualifying, right? Like that doesn't happen anymore. You need to be able to offer them the payments as the table stakes, but layer in other products. And because merchants want more solutions, they're more open to having those conversations. Back in the day, they just wanted to know that their payments worked, right? They didn't want to talk about marketing. They didn't want to talk about business insurance. They didn't want to talk about those things. So now the merchant wants to hear about them. And to Alex's point, calling in a software technology company that's going to send you to some call center or, check out this document online and figure it out yourself. They don't want to do that, right? So I think the ISOs that are willing to have the conversations with their merchants and finding the right tools to value sell into, I think those groups are going to do so well.
The interesting thing that I'm seeing also, at least from a bank perspective, not necessarily from a sponsor bank, but just in general, banks that are going out and selling into SMBs, is because they take a little bit longer to innovate. I think they've taken longer, but they're getting close. And so I would predict that if the ISO community is not facing a merchant who's saying, my banker is here trying to sell me merchant services. And by the way, they've got tech. And by the way, they can beat your pricing. And they also have my deposits today. So let me just make it easy for myself. Again, if you think about those things as just, the value that's being offered, I can say with confidence that it's not just the technology providers and the fintechs that are coming in and kind of winning market share of the SMB community. I would say that there is also banks that are finally getting to a place where they can launch their innovative products that they've been working on for the last 2, 5, 7 years, and they'll be at the table as well. And that's a much more difficult competitor to overcome because they already have that merchant's business from the banking standpoint. So it's going to be an interesting, I think, kind of environment that we're in the next 24 months when it comes to who's trying to win kind of the share of the SMB business.
Okay. So Alexander, question for you. So if someone is interested in learning more, how can they learn more about MAPP? And then second part of the question is, how do you guys engage with people? What's that kind of look like?
Yeah, so I'll answer the second one first. Each engagement is unique. I think the common theme with us is intellectual curiosity and a hands-on approach, right? We get into the weeds with our clients and we skew towards taking on projects that are actionable, right? If you're looking for a team to provide high-level general advice on a retainer, there's plenty of firms who can offer that to you, but we're probably not the right fit. We want to solve problems and create enterprise value. Finding us, you can go to our website, mappadvisors.com, and bump into us at any of the trade shows. We're sponsoring the ISV Village again this year at ETA Transact, which is just around the corner. So hope to run into you and all your listeners there.
Okay. So obviously we've covered a lot of ground. We've talked about banks. We've talked about ISOs and ISVs and fintech and the industry as a whole. Is there anything else that either one of you would like to add before we wrap up the show?
No, I think this was great. This was a lot of fun. Thanks for the opportunity. Like I said, you've got some great prior attendees that have come on. So it's really an honor to be here and to chat with you today.
Great. Well, thank you both so much for being on the show. I know your time is very valuable. So again, thank you so much for being on today.
Thanks so much, Greg.
Thanks, Greg.
And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us today as we discuss the evolving payments landscape, the challenges and opportunities facing ISOs, ISVs, and banks, and how MAPP Advisors helps businesses navigate growth, regulation, and strategic partnerships. To learn more about MAPP Advisors, visit www.mappadvisors.com.